Okay, good evening, everyone, and welcome to market session tonight. Please confirm you can hear me clearly. Please confirm you can hear me clearly and you can see my screen clearly. So I would wait few seconds to confirm that before we get started. Welcome and good evening tonight to everyone joining. I hope last week was a profitable one for you. So welcome tonight. Please confirm you can hear me and you can see my screen clearly. Let's quickly confirm that and then we'll move on. Okay, so thank you so much. Thank you. Uh, Thank you for that. So let's get started. Let's get started. So last week we looked at few things, few assets, and then we are going to be reviewing few other more this week. So by the end of this weekend, hopefully by the end of this week, we'll be reviewing. We would have market session. I mean, peaceful investing, where we'll review, which is strictly for investors, where we'll review market performance for the month of July. That's where we review market performance for the month of July. So hopefully, this weekend, probably this Saturday, the Saturday, 1st of March, we'll be reviewing that hopefully. But tonight, let's get into the chart and see opportunities available for this week. So I'm starting with my favorite pair, as you all know, um, Euro JPY, at least for now. So let me remove all of this and then let's have a blank chart. So let's go to daily candle, to the daily time frame. So to the daily time frame, let me remove this and then go to the daily time frame. Okay, so here we are, the daily time frame. So, as you can see, market is uh, obviously at a very critical point at the moment. So let me zoom out and remove. Okay, let me open this chart. Let me open a clean version of this chart so that we can have. I don't want to remove all that, so let me open a clean chart. Sorry, a minute, please. I just want to open a clean chart. Okay, I think this is clean. Okay, at least cleaner than that. Uh, okay, this is better. Um, as you can see, market is at a very critical point. Market is at a very critical point. What happened last week? This is what happened last week. One, two, three, five, six. So, throughout last week, market sold throughout last week. Market sold throughout last week. So, and then sold with a huge momentum as well. Now, this is there's a lot of money here. There's a lot of money around here, you know. There's a lot of money around here waiting for the market, a whole lot of money, a whole lot of liquidity. There's a whole lot of liquidity here, a whole lot. Let me just leave it like this. There's a whole lot of liquidity here. Why? Because it's an hold low, a very old one. Yes, there's a lot of liquidity waiting for market here. And then why am I saying that? Because market is people that will be buy tonight because of the rejection here. There's a rejection that is obvious here. Let's go to the 1 hour candlestick. Because of this rejection, and then because as many people trade with support and resistance and all of that, this is obviously a huge support or you know a huge zone. So people that are buying here, I mean their stop loss will be below this place, and then that stop loss is what? Huge liquidity for the market. So, like I've loved to always say, follow currently market is selling until we have a clear confirmation, a clear change of direction. We cannot claim market go on a buy. The and even the short-term direction of the market is still a sell. So, until we see a clear-cut change of character, we are looking for a sell. Directional bias is a huge part of how easy your trade is speaking. Directional bias, I got, you know, I got tricked by this as well, by this huge volume momentum, and I felt market has changed direction, only for it not to be able to break this level. If market has closed above here, if market closed here above this, I mean, we'll have said there's a change of character. But look at what happened. Market only 2 weeks above it. Let's even go to H4. As you can see, look at it. Let's go to um, uh, okay. So you can see that market did not break. I mean, just a bit above. We can't consider this a break of structure. We can't consider this a break of, I mean, a change of character rather. So, um, so if I had had a change of character there, the next thing would have been to see market come down, take liquidity in a fair value gap here and to the high and then to the moon. But since that did not happen, what we are looking forward to here, should I tell you guys, what we are looking forward to, or what I am looking forward to see here is what? Is a break of structure here. What am I saying? That I'm looking forward to market to break this lines. Forget these, let me even delete it. Forward to is market to break to the downside here. Let me delete this. What I'm looking forward to is market to come from here. Is market to give us a break of structure by shooting below this place. Once we have a confirmed break of structure here, liquidity grab. Two scenarios are possible here. We have a liquidity grab, that is market go down, then come back up and close above this small line I drew here. You know, market goes and then close. Let me delete this and do it the right way. What am I supposed to use? This I'm supposed to use. So let me even bring it down a little bit. The huge one. So now this line now. So market can come down just like this line I drew and then still close above. Once we have that, the next thing would be, we saw that liquidity graph. Market is not breaking structure. Market is uh is not is not is not ready to go down. It still does not mean a change of character yet until we break this high. But then basically we are not supposed to be doing all of this analysis on daily count because as here we are not swing traders. So let's go to what H4. So like I was saying, two scenarios are possible here. The first scenario is market break this. Remember, we don't predict the market. We study it, wait for what the market will do, and when we make profit from it. So market break into this place, give us a clear break of structure, either on H4 or H1. Give us a clear break of structure. Once we have that, then the trade is giving us a good vibe already. Then we wait for market to retrace into a premium level, or or somewhere here, which is an hold high. So look at it, market can retrace into a fair value gap. We have one here already. We have a huge fair value gap here. Market can retrace into this place, or market can retrace into a hold high, a hold low here, serving as a good uh, a good place for market to turn back, and then from there we continue the sell. This is a possibility. Another possibility is market give us a liquidity sweep or a liquidity grab, and then market goes ahead and then take out this high. So once market take out this high and give us a break of structure, the next thing we'll be looking forward to is market to retrace into this same fair value gap, and then we can have a buy all the way to this liquidity, to this place. These are the two scenarios I can see clearly here. Those are the two scenarios I can see clearly here. So, but wait and see what market is going to do, basically. So I'm going to drop this chart on the group You can private chat me. I will add you or send you a link to join the market session group for discussions and then reminders. So basically, that's the scenarios I can see that are likely to play out for Euro JPY for this new week. Now, the next thing, let's quickly look at the DXY. DXY. Um, Let me quickly refresh this. So the DXY is the dollar index, which determine a lot of things. DXY. It determines a lot of things, determine of the movement of it helps you understand the movement of all dollar pairs from USD JPY to Euro USD to GBP USD or USD pair basically. So we are currently seeing a downtrend on the dollar index, which is a good one for global economics generally. I'm not going to get into that. So, but let's zoom out and see what to expect. Look at this. There's huge, strength here. Huge momentum downwards. Huge momentum downwards. It's obvious. It's obvious that the market is, going down. It's a clear downtrend, a very clear one, and then the next liquidity, if it were to be a pair, this would be the target because this is the next location for liquidity here. But then all we need the DXY to tell us is the direction of the market. The market is DXY is down, is going downward, which means that naturally, all things being equal, everything, every asset or every uh, commodity or anything at all that is trading against the dollar should be rising at the moment. First thing. So it gives you a directional bias tentatively. So now, now that we've established what is happening to the DXY, then go to what should be happening to the two other most common assets that trade against the DXY. The first one is Bitcoin. Let me quickly check Bitcoin. Now let's go to the daily time frame. So this is the daily time frame. We are still in that range, the range we've been in since I think 2 weeks now, and I'm not going to lose money by trading this range. So staying out of this range until we take out this low or this high. So until then, let's still be. So market is in an obvious range. Look at it. Let's go to it. So the question is, can I trade this range? You can, but then I mean, why do you have to trade a range if you have other things with clear direction you can trade? This is the range. Market is in the range between 99, basically, 95, thereabouts. So let's not waste time on that. Let's go to the gold. So gold, let's go to daily candle. Don't forget from what we discovered from the DXY, gold should be buying, right? Gold should be an uptrend. Likewise Bitcoin, but Bitcoin is not showing us uptrend. Bitcoin is doing what? Is XAUSD is in a range. So let's see what gold is going to show us, what we are going to see in gold. So let's go back to the daily candle, daily time frame. So obviously the gold has been buying. It's obvious. Gold has been in an obvious uptrend for you know the last few days, you know, except for this, the last few days, 1, 2, 3, 4, 5. The last 5 days has been uptrend. So what are we likely to see? Let's go to H4. Remember, judging by the DXY index, we should be buying. From the directional bias that we also saw from day one, I mean, it's a buy. It is, an uptrend. So what are we looking at? Gold seems to be in a range as well. Look at this range. Just look at this. So gold and Bitcoin seems to be in a range, and I will not want to trade a range. I would not want to trade a range, and I don't advise you to trade a range as well, unless you've mastered the act of trading a range. So gold is also in a range, fluctuating between 2954 and then 2917. Let's go to 1 hour time frame. So you can see it's obviously in a range. So before we take any action on gold, we to take out this range. Take out this, and don't forget, we are looking for what? Um, we are looking toward to see gold buy, because DXY is selling, gold should be buying. I mean, naturally, as simple as that. But it is in a range. Let's even see. Maybe DXY is also in a range. Obviously, not in a range. So, gold is in a range, Bitcoin is in a range. There's a reason for that, but it's beyond the scope of the session. We wait, for these two assets to leave the range, and then we'll know what to do next. So, basically, those are the things. Um, those are my outlook for the market tonight. If you have any other pair you want me to quickly look at, we have 80 minutes to the end of this call tonight. If you have any other pair you want me to look at tonight, please drop it in the chat box, and then we'll quickly look at that. So while waiting for that, let's see what is possible on USD JPY. Duplicate USD JPY. USD JPY. USD JPY. Don't forget the DXY, which is the USD, is selling, right? So USD as its base should be selling. Can you see this? Simple, the correlational techniques, bias. Of course, we will not get into the pair and look at the specifics, but just for you to form a bias, look at this. This USD JPY is selling. Of course, Euro JPY too is selling. So it just make a lot of sense. And the chart looks a little bit the same. So USD JPY, just like Euro JPY, is also in a very also at a very good point. Approaching a huge a hold low, but it's been selling on the daily candle. It's been a sell all along. It's been a sell all along, and then even when we reach this place and then give us a huge volume upward, obviously it was looking for liquidity, which it got around here. Look at this huge fair value gap. That was what attracted price, and then give price the momentum to finish the last leg, which is this one. So now we've broken through this level to look for another level. Now here now is another level until we see market take out probably this will still be the bias, will still be a sell. But then let's go to each for maybe we can see uh okay, maybe here, but let's just see what market we do. So I mean the same thing holds, just let me not take time on it. The same thing I explained on Euro JPY OTA as well. So let's check GBP USD. Can you see that strong candle? Okay, this is 0 JPY. Wow, look at this. Just look at this. Wow. Okay, so let's just Let's go to GBP USD. Just 5 minutes and we'll be done. GBP sorry, GBP JPY rather, JPY. So the whole thing is the same. The whole bias is the same. GPY2, let's go to the daily candle. It's obvious it's been selling since the last few days. And then the trend has been a bearish trend, as you can see. Of course, constantly going up to peak liquidity, then creating a lower low. So look at this high, low, lower high, lower low, lower high, lower low. Look at this lower high was formed at the base of the low. So lower high, lower low, and then obviously it was this. There's a fair value gap here, and then of course old low that attracted the price, and then it fell, created the lower low, then came up again to other block somewhere here, created, you know, another lower high. So what are we expecting? The lower low, the lower low. So what are we expecting? A lower low. So like I've said this and emphasized this, we are looking towards to see, we are looking to see that market, give us a new low. So look at this, for example. You can't consider this a break of structure yet. Honestly, you can't. Honestly, you can't. It looks like it, but you can't. It is too small to consider it a break of structure. And looking at, this was the close of market, liquidity already reduced. So you don't want to believe that. So let market open. Let's see if it's going to be a complete break of structure. Then you can now see good one, well played. Then wait for market to retrace uh, into to retrace into an institutional level here. You know, there are a good number here. This is a good fair value gap, which is also backed by a breaker block and then other block. A good one, and then market retrace into that, and then from there we see market give us a new low that we've been expecting, or at another. This is also a good one. You know, is a hold low and then also a fair value gap. But let's see which one is in the premium side. So this is in the premium side. So this is likely to work. Market is likely to retrace here and not here. So let's delete this. But just it's like I love to say, we don't predict the market. We watch out for market doing what it will do, and then you react based on what market is doing. So basically, that's all for tonight. Thank you so much for joining me tonight. So I wish you a very profitable week ahead. Let's continue the conversation on the group. Thank you so much and see you next week. Bye.